What is good, YouTube? Channel FX back again. Like I always say, here to put you on game, dog. Here to put you on game, fam. So with that being said, let's just get straight to business. So taking a look at GBPCHF once again. What do we do first? We first need to identify our trend. Okay? And looking at our charts, what is the trend? We are in an uptrend or we are in a bullish trend. How do I know that? We first need to identify our market structures. So first of all, price comes back to create this lower high. Okay, so after it creates this lower high, what does it do next? It comes back down to create this lower low. Do you get me? After it creates this lower high, what does it do? It comes down to create this lower low. So after it comes down to create this lower low, what does it do next? It rallies back up to break our previous lower high and creates what? A new higher high. What did I say price did? It rallied back up to break our previous lower high and creates this new higher high. Okay, so after price creates this new higher high, what does it do? It retraces back to create a higher low. Why do I call this a higher low? Because this low is higher than that of this low right here. So this becomes our new higher low. So after price creates this new higher low, what does it do? It rallies back up again and creates a new higher high. Why do I say this is a new higher high? Because this high is higher than that of this high. Do you get me? So after price does this, what are we expecting price to do? We are expecting price to retrace a little bit or to give us a discount. So we continue back to the upside. Okay, so after price creates this higher high, what do I do next? I go to my lower time frame, which is the H1 time frame. So like I said earlier on, what are we expecting price to do? We are expecting price to take a retracement, or we are expecting price to retrace. Okay, so looking at our H1 chart, where are we expecting price to retrace to? We are expecting price to retrace to this level or this resistance right here. Okay, how do we know price is supposed to retrace to this level? If I'm to take my Fibonacci tool and draw from this higher low right here and drag to this higher high right here, we realize that this resistance is in confluence with our 50% Fibonacci level, or better still, it's in confluence with our golden zone, which is the 50% and the 61.8 Fibonacci levels. Do you all get it? Good. The fact that we're expecting price to come here doesn't mean price will always come here. Or the fact that this resistance is in confluence with our Fibonacci level doesn't mean price will always come there. Okay, price can decide to just retest this resistance right here or this higher high right here and go back up. Do you get me? Good. So the fact that this resistance right here is in confluence with our Fibonacci level doesn't mean price must always retrace to that level before going up. Okay, you don't tell price what to do. You just flow with the market. Do you get me? Good. But the purpose of this video is to teach you how to catch the retracement. The purpose of this video is to teach you how to catch a retracement. Okay, the fact that we are trying to catch a retracement doesn't mean price is bearish. No. I repeat, the fact that we are trying to catch a retracement doesn't mean price is bearish. No. The trend on the higher time frame, which is our H4 time frame, is bullish. So price is still bullish. So that trend changes. So that H4 trend changes. Price is still bullish. Do you get me? Good. So when price came back into this into our higher high the second time, our higher high zone the second time, what did it do? Before price got into that zone, it gave us some signals, some weakness signals that we don't have enough momentum, so we are going to drop. And what signals are we talking about? We are talking about the rejections, candlestick rejections. Do you all get me? Can you all spot the rejections? Yes, there were lots of rejections. How many rejections can we see? We can see 1, 2, 3, 4, 5, 6, 7, 8. 8 rejections. Price gave us 8 rejections before it finally got into that zone. Okay, so when price got into that zone, what confirmation? What was the ultimate confirmation? What was the final confirmation that led us to taking that trade or going in for shorts? The final confirmation was a bearish engulfing candlestick. And can we spot a bearish engulfing candlestick? Yes. This red candlestick right here. Why do we say this is a bearish engulfing candlestick? Because the closure of this candlestick is lower than the opening of this black candlestick or this bullish candlestick right here. Do you get me? So this becomes our final confirmation. So after we get our bearish engulfing candlestick, we enter our trade right here. Risk about 20 pips. Cool, 20 pips. And I'll take profit to our retracement level or our resistance level or our resistance zone. That's where we'll take profit. Okay, so I was risking 20 pips to make 110 pips, which was a 1:5.48 risk to reward ratio. Again, me as simple as that. As simple as that. Sniper entry, tight stop loss. Okay, so after price came into our resistance level where we were expecting the retracement to end, what do we do next? Take our Fibonacci. We drag from point A to point B. We can see that our resistance comes in confluence with our golden zone, our Fibonacci golden zone, which is our 50 to 61.8 Fibonacci golden zone. Okay, so going into next week, I'm still bullish on GBP CHF. So going into next week, I'll be waiting for price to break this trend line right here. I'll be waiting for price to break this trend line right here. If price is able to close above our trend line, that's when I'll enter for longs, or that's when I'll enter for buys. As simple as that. So you all take note of this setup for next week. If price breaks above or closes above our trend line, we'll be looking for buys next week, or price will still continue its trend to the upside next week. And I'll take profits. Our first take profit will be around our 0% level. Okay, our first take profit will be around our 0 level or our higher high level. Okay, Our first take profit will be at our 0% level. Our second take profit will be at the negative 27% extension level. You get me? Our negative 27% extension level will be our second take profit. And if price has a strong momentum, our second take profit will be the negative 61.8% extension Fibonacci level. Alright, so you all take note for next week. Take note of this setup for next week, okay? So with that being said, I would like to end this video right here. Alright, but before you click off this video, please don't forget to subscribe, like, drop a comment down below on which topics you all want me to tackle. With that being said, see you in the next video. Ciao, FX. Peace.